Welcome to Trader TV, your insights into trading for professional investors. I'm Dan Barnes. The way that traders execute in the FX markets is changing and evolving, particularly in terms of market structure. To discuss this with me today is Jay Moore, founder and CEO of FX Hedgepool. We're going to be talking about some of the changes that we're seeing in market structure and why they're occurring. Jay, welcome back to the show.
Thanks for having me back, Dan. Good to be here.
So you're seeing 200 billion a month at the moment in terms of trading volumes. Why are investment firms using your platform so much at the moment?
Last time I was on the show, we talked a lot about how Hedgepool has really changed sort of the way the market structure fits together in the FX markets, particularly around the idea of separating liquidity from credit, opening up the potential for buy-side firms to provide liquidity to another buy-side firm on the other end. And really, when we started this, we looked at in particular for us, the swap space, where you can only get prices from the banks that you have credit relationships with. So breaking that tie, I think, really opens up potential for savings. If you have large passive hedgers doing multi-billion-dollar swap trades on a monthly or quarterly basis, they're speaking to their sales traders at those banks that they have credit relationships with, and that's where they get their prices from. And at the same time, those banks may have an offsetting position with another client. They may not, and they need to go to brokers or other banks for liquidity so that they can price that client. And ultimately, it finds its way through a series of transactions to another passive hedger on the other side, potentially. And naturally, there's settlement risk, there's CLS fees, there's platform fees, there's all of these layers of fees on every single one of those transactions. All of those layers of costs, they come from where? You and I, as investors in the funds. And so what we found is that naturally people have reached out with interest in what we're doing from the buy side and the sell side because they have sort of fiduciary responsibilities to, us as investors, right? To provide better products, lower fees, better tracking of the index. All of these things come down to performance, and, performance is driven by cost.
What would you say is the demographic of firms trading via FX Hedgepool at the moment?
Naturally, the buy side. This is what we originally set out to sort of address. We thought this was going to be, at the very beginning, a play on spreads and fees and, the overall T costs of a trade. And it turns out that, obviously the FX markets are the biggest market in the world, and swaps and forwards are the biggest part of that market.
Yeah.
So these swaps, the liquidity is enormous. And as a result, obviously spreads are pretty competitive. When we started to speak to the large asset managers and the buy side firms that work with us, they started highlighting a lot more of the pain points beyond spread. And, those costs are operational in nature, right? Naturally, you've got a huge amount of resources that are required to get these trades done and the risk that comes along with that. Tracking error, of course. I mean, when you're trying to match a benchmark for a particular index that you're tracking, if you are an index tracker. And then, of course, there's credit optimization, the fact that you've got a very few number of banks that dominate the market. So in order to get the best prices, you have to really take on a lot of credit risk with those banks. But the biggest one, I would argue, is market impact, especially with these very large, predictable, scheduled hedges that are rolled on a calendar basis. That in and of itself is a lot of information that banks have and that they need to use in order to provide liquidity. So if they know that every month you're sending 5 yards of euro dollar to them and expecting a price in return, they may pre-hedge that position to build an inventory so that ultimately they can provide you a price. Now, at that point, the market has already moved because the banks have pre-hedged you.
Yeah.
You have to allow them to manage risk. You can't expect to call a bank and say, what's your price on 5 yards of euro dollar? And they give you a price and then scramble to get out of it. These are very large trades that they need to be able to manage. So the banks are stuck between a rock and a hard place with all of the pressures that we see around market impact. And so this is really the biggest concern that's kind of, I think, making both the buy side and the sell side attracted to the model that we've created, because for the buy side, naturally, peer-to-peer trading has no market impact. On the other side of the equation, it's banks saying, look, I know that I'm providing credit as a service. I can be the counterparty and allow my clients to spread and use more of my balance sheet for these trades without having to get in the middle of the trade from a pricing perspective.
So then what would new users need to do if they wanted to gain similar advantages?
Naturally, people are hesitant to change. New platforms, new venues, new workflows in general create risk from their perspective. Because of that, what we've done is fit in with workflows, right? Not asking the buy side to do things differently than they have before, or the sell side for that matter. So we've taken painstaking efforts to really integrate ourselves into existing platforms, OMSs, EMSs that the market use today, rather than asking people to do something different. And I think these efforts are going to bear fruit in that it's going to create a much more familiar workflow for new users to just adopt without having to change the way they do things.
Jay, that's been really good, and congratulations on the business success so far.
Thanks a lot, Dan. Thanks for having me again.
I'd like to thank Jay for his insights today, and of course you for watching. To catch up on our other shows, or to subscribe to our newsletter, go to tradertv.net.